Welcome to Looking at the Markets with me, David Modell. Today we're going to talk about, do RSI and Bollinger Bands really work? So let's talk about that. Bollinger Bands versus RSI. As a swing trader, I use the 14-period RSI, and that stands for Relative Strength Index, with over 70 being overbought. I consider over 70 to be overbought, and under 30 being oversold. And Bollinger Bands at the standard settings, with the candlestick piercing the top band as overbought and the candlestick piercing the bottom band as oversold. In other words, if I use the daily charts, so if a particular candlestick pierces up above the top Bollinger Band, then I would consider that to be overbought or expensive. And if it pierces below the lower Bollinger Band, then I would consider that to be oversold or relatively cheap or inexpensive. Bollinger Bands tend to give a lot more overbought and oversold signals than RSI. So if you're looking to trade more often, then you might want to use Bollinger Bands. If you want to be a little more careful, a little more conservative, trade less often, then you might want to look at the RSI instead of that. Unlike RSI, Bollinger Bands can contract or squeeze, indicating that a big move or a breakout is likely to happen. So that might be an advantage of Bollinger Bands over RSI. Here's a word of caution, though, and we're going to talk more about this. Don't count on Bollinger Bands or RSI. Don't count on either one during major news events, such as Brexit. That was a recent one. Earnings reports, and I'm talking about right before the earnings report. Fed announcements, and so on. So we'll look at some examples and some features of Bollinger Bands and RSI. Again, I use daily charts. So each of these candlesticks represents one trading day. And this is for SPY, the ETF that tracks the S&P 500. And I like to trade this one a lot. So let's look at the Bollinger Bands first. As we can see, the Bollinger Bands work very well sometimes. Check it out. It bounced right off of this one. So if you bought right here, right when it pierced the lower Bollinger Band, you would have made some money. If you bought right here, would have made some money. And what some people like to do is they might buy at the lower band, and then as soon as it hits the top band, they might sell. Okay. Now, remember we pointed out that you don't want to count on these indicators working during major news events, upcoming major news events. Here's a perfect example. This was the Brexit scare. I remember that. That was recent. And during these news events, upcoming major events, the candlestick or the price action oftentimes will just break right through the Bollinger Bands. And so the bands become, I don't want to say meaningless, but they become less useful. Okay, because it'll just break right through them. All right. So be aware of that. That's a good example of not counting on Bollinger Bands or RSI, for that matter, working, because you've got some major news event coming right up soon. Now, notice that on the RSI, you get overbought and oversold signals less often. There are fewer of them on the RSI. You got one here, you got one here, you got one here, but there are long periods of time when you don't get any overbought or oversold signals. You finally get an oversold signal right here. If you look at this whole chart here, there's only one oversold signal. You would only buy one time if you were to use only the RSI. And if that's the way you want to invest, then that's fine. If you're the type of trader or investor who wants to wait for extremes and you don't mind waiting for months at a time before making a trade, then the 14 period RSI might be for you. If you want more, if you want your overbought and oversold signals to happen more often, then Bollinger Bands might be for you, because you can see you got a signal here, you got a signal here, and this one worked out quite well actually, bounced right off of it. You got a signal here, 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 and here. So it depends on your trading time frame and how patient you want to be with your trades. Let's look at Apple. We see some features here of Bollinger Bands. We pointed out earlier that Bollinger Bands have a nice feature that RSI does not have, which is that Bollinger Bands can squeeze when the distance between the two, the top and bottom band get closer together. Then that means that there's been a lot of sideways or contained, range action. It's a lot of sideways movement recently. And that means that you might expect a breakout to the upside or downside, but you can expect more movement fairly soon, oftentimes. Here's a perfect example with Apple of a Bollinger Band squeeze right here. They contracted, followed by a big breakout. And that doesn't always work. You can have a squeeze not followed by a breakout, but that is a possibility. Here's an example of an earnings report, and as you can see, it was a big miss for Apple on that day in late April. I believe it was the 26th of April or thereabouts. And again, you can't count on Bollinger Bands working on those days. It pierced the bottom band, and you might think, oh, well, I should buy here because it's relatively inexpensive, but that was right before an earnings report, which was a big miss. It could have gone up very sharply, but it went down very sharply. And so that's why I don't count on these types of indicators working when there's a news event or earnings report coming up. Now, also notice, before I read this, notice that on the RSI, the price can stay in oversold territory for a while. Just because it goes into oversold territory doesn't mean it's going to come right back out. Okay, you have to be patient with these things. It can also go into overbought territory for a long time. Now, I wrote here a note that some traders will buy when the RSI curls up out of the oversold region, and that's a good way to do it. You might not want to buy right when it pierces the oversold region. You might want to wait until it's been in the oversold region, and then the RSI starts curling up out of it back into the middle. That's a good place to buy oftentimes, and as you can see, it worked perfectly here. It went up after that. Here's another example, GLD, which represents the price of gold. It tracks gold prices. And on this one, the Bollinger Bands worked quite well. Not every time, but it seems to have worked pretty well here. You can see if you had shorted here or bought puts here, you would have made some money. And if you would have waited even longer, you would have made more money. And then you could have sold your puts or covered your short position, and then you could bought GLD or bought calls when it hit the bottom band here, and you would have made a little bit of money. And then you could have bought here and you would have made some money. Could have bought here, would have made some money. Could have sold here or shorted or bought puts here. You would have done okay, would have done well. And definitely here, it pierced right about here and it went a little bit above, but if you had just held on, you would have done quite well if you had bought puts here or just shorted GLD outright. Okay, or here, same thing. Um, if you had bought puts here or shorted GLD, you would have done well. It doesn't work every time. As you can see, sometimes it will pierce the top band and then just keep going. But even here, if you had bought puts here and just waited a little bit, and I'm assuming, see, here's the thing. If you had bought weekly puts expiring in a few days right here, you might not have done so well. But if you had bought long-term puts going 5 or 6 months out, like I like to do, and then just held on, you see it went down. So you would have done better. Now let's look at the RSI. As you can see, very few overbought or oversold signals are given by the RSI here. There's one here, okay, but from, let's say, here all the way to here for almost, like 3/4 of this entire period of time here, if you had just relied on overbought, oversold using 30 and 70 or 70 and 30 on the RSI, you would have gone for a long time doing nothing, which is okay. There's really nothing wrong with that if you have the patience for that. So what's the takeaway? Well, there are several here, I believe. Bollinger Bands and RSI work fairly well, albeit not perfectly, as recommendations or suggestions of when to buy or sell. Now, if you're thinking about buying a stock, but you're not sure what's a cheap or expensive price for that stock, Bollinger Bands and RSI are a good place to start. Okay, so if you're looking at a stock or an ETF or whatever for the first time and you don't know, what's considered cheap, what's considered expensive, when do I buy, when do I sell? If you just have no clue, well, the first thing you want to do is really research that stock or ETF or currency or whatever. You want to research it thoroughly, get to know it very well. But then if you're not sure what a good price is, what's cheap, what's expensive, Bollinger Bands and RSI can be a really great place to start. They can give you guidelines or recommendations, and that's all they are. They're just guidelines or recommendations. They're not commands to buy or sell. And finally, I don't recommend relying on them before upcoming news events or earnings reports. Well, if you'd like more help with this, I can certainly assist you. My name is David Modell, and if you want to contact me, we can discuss finance, options, stocks, indicators like we talked about today, and we can make a trading plan or investing plan for you so you can be more successful. You can contact me anytime. My email address is davidmodell@gmail.com. And by the way, if you like my videos, please feel free to give it a thumbs up, leave a comment. I'm always glad to hear from you. Thanks a lot and hope to talk to you soon.